Hello everyone, this is today's video analysis for April 12, 2019. Today we're looking at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. There's really two trends here on the daily time frame we want to look at. That's the red trend line and the blue trend line. Those are the most important trends for our current market price action. Let's go ahead and zoom it in one time. Red trend line, clearly a downtrend. It was pushing lower from the highest high on the chart, just above the 1.01 level. Fell down into the 0.9890s as it pressured back down towards the bottom of the red trend line. Then turned right back around, started moving back higher. We see these three periods, and I'm highlighting them with black boxes on purpose because I think it's applicable to our current analysis, where we see the market rising from the low, going into about a week and a half of price action between the blue and the orange zone. Happened to be the 100 and 200 period moving average, by the way. Bouncing around in there for a while, broke out higher, and then got back above the 100 period moving average orange shaded area, bounced around for about a week between the orange and the green zone. And then the past couple of days, we've seen it break above the green zone and now finding resistance at the yellow zone. So if we're following this trend pattern, the blue trend line, then what we're looking at now is support into the green shaded area and above the rising blue trend line here on the dollar franc. Let's go ahead and zoom it in one more time. I've also taken Fibonacci here on the chart from the top of the red trend line to the bottom. Some interesting things about Fibonacci here is the 0.382 Fibonacci retracement level of the red trend line was down here at 99.73, just above the orange shaded area and the 100 period moving average, that middle black box. And the 50% retracement level lives at 1.0, basically the parity level right at the top of the green shader. And that's an interesting aspect as well. 1.0 parity sitting right there at the top of the green shaded area. And then, of course, the yellow zone, where we're currently finding resistance, 1.3035 area, is where the 0.618 Fibonacci retracement level of the red trend line sits. So it's interesting how these boxes and the colored shaded areas happen to correspond, resistance and support, around where the Fibonacci levels are as well. So with the 50%, with the 1.0, with the blue trend line, with historical support around the green zone, we're challenging that today as our barrier of support. And of course, first off, I would say you probably don't want to go short and sell on top of that. That doesn't make a lot of sense right now. Yes, the market's more bearish right now, but selling on top of that just, technically just doesn't make a whole lot of sense to do that right now because it's holding it as a barrier of support. The only real reason I think you go short is that it breaks through that green shaded area. And obviously it hadn't done that yet. What about going long? That becomes a potential opportunity in the direction of our current trend pattern. If we see a nice solid possible rise on the US dollar, then we could see this head back from the green zone 1.0 back to 1.0035. The yellow zone, obviously resistance right now, and of course a break of that yellow zone will look for the continuation higher. So as it stands right now, and if we can follow the rising blue trend pattern, we're more likely into the green zone looking for clues of support and reversal. Again, we need the US dollar to take another turn higher. We need this to continue to hold above 1.0 before we would take a buy. Let's go ahead and take it on down to the 4-hour time frame. And again, the blue trend line showing exactly what we were talking about on the daily time frame. Nothing's changed. It just shows us some more detail here. Clearly, the market has fallen over the past 24 hours, fallen back down here to the green zone. But again, it's done that before. Each one of these black boxes shows that. We could see that happening here within that first area. We can see that happening here within this middle area. So this isn't anything new. This is exactly what it's been doing. So again, I just don't think that going short right now makes a whole heck of a lot of sense here for the dollar franc. Stay long, looking for buying pressure. That's really, I can think, what we're going to look for. Maybe even a dip down into the green zone, and then maybe a sudden indication of buying pressure. Bullish engulfing candle, hammer candlestick, something of the like, to give us confidence that buyers are sitting here at the green zone and it's going to do what it did the last time at the orange zone there where the green circle is and turn around and go back higher. The other side of this picture is, what about going short? Again, I think if you're going to go short, you do it closer to the yellow zone. Of course, your risk is smaller at that point. But also, we could be looking for the breakout underneath the green shaded area. That would be the next thing we could look at for going short here on the dollar franc. So number one, we're watching for support at the green zone and potential for this to turn around and go back up. Number two, to break out underneath, we start to look for the dollar franc to go lower, maybe even going on into next week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.